Hello traders, this is Blake Morrow and you are listening to the week ahead video for May 16th, 2021. You guys, if you live in the United States, tax day is tomorrow. It's tomorrow. It's not April 15th, it's actually May 17th. They moved it back a month. So just keep that in mind. I know you guys, especially those of us in the United States, we don't want to hear that news. Sorry. Anyway, I'm still getting used to actually filming and looking at the camera while I'm doing these week ahead videos, so you have to bear with me. Now, I'm gonna do a couple of things a little different today, and before I do so, if you guys like these videos, make sure you give us a thumbs up, and also down below, please comment in the comment section if you catch me missing something. Like last week, I don't even think I went over what's no. It was like 2 weeks ago. I don't think I went over what was happening that next week for economic data. So I don't want to forget that. Last week we talked about how important CPI was going to be, and it was. So I wanted to mention that, and please subscribe to our channel. You know, we're putting out some new videos, educational videos. So if you like that education, we're calling them Trading Tips by ForexAnalytix. If you like those, make sure you subscribe to our channel down below. This way you can see all those training videos. A lot of them are for newer traders, but there's a lot of little zingers I'm going to be putting in there for you in the months ahead. So I hope you guys enjoy that. Also, I want to mention, if you haven't been to tradersummit.net yet, it's where, we do these events a couple times a year, and you guys probably remember these online events where we have all of these keynote speakers speaking and presenting. Well, we put together tradersummit.net, a website to compile all this information, all this analysis and education and everything together. So make sure you guys check it out. It's pretty cool. I've been doing some videos. I've been hosting some videos there this last week, and we're putting a lot of new content on tradersummit.net, so make sure you check that out. And also, guys, if you haven't tried out ForexAnalytix, remember, it's $1. $1 for 10 days. That's it. $1 for 10 days. And then try it out. Download the mobile app. And by the way, we are rewriting the mobile app starting here in the next couple of months. It's not cheap. If you've ever developed a mobile app, you would know. And if you never have, it's not inexpensive. And we have to redo it and upgrade the technology. Our technology here is still pretty cool. We're just going to be adding some new features and bring it all up to everything, all the code up to speed. Anyway, you can download it at the Apple iTunes Store or Google Play Store. Okay, enough said. Let's get to the markets and let's talk about what's happening. Let's start off talking about what's happening this next week. So you can go to our calendar on, ForexAnalytix and follow along if you want. You can see everything that's happening next week. This is on this week, but you'd have to go to the following week. Well, you know what? You'll be able to see it tomorrow when you're watching this on Sunday. So let me just share with you what is happening. So next week, if you have any Aussie exposure, yep. The Aussie employment's on Wednesday, so keep that in mind. We have UK CPI is actually on Tuesday, and actually, going into Monday night, Tuesday morning in Australia, we have, even before the employment data, we're going to have policy, RBA, the Reserve Bank of Australia, their policy meeting minutes. So keep an eye on that. U.S. is kind of lacking for data this week. On Thursday, we have Philly Fed, we have unemployment claims, and actually we have flash manufacturing PMIs on Friday. But the more important data is going to be coming out of Australia and then Europe at the end of the week, because we do have retail sales out of Australia on Thursday, and then on Friday we also have a lot of German PMIs and a lot of Eurozone, PMIs also out of Germany as well. But we have French PMIs, flash manufacturing PMIs out of the Eurozone and UK. So most of the data is going to be Australia and European driven. This last week, we had CPI, and then on Friday, we had a huge miss on unemployment data. Now, if you think about that, okay, and you think about the price action actually of this last week, We didn't move a whole lot. Equities came off a little bit, and I'll talk about that here in a second. And I'm going to stop here and talk a little bit about the dollar's reaction and where we're at. And I'm going to be completely frank with you guys regarding the dollar. Usually I have an opinion. This week coming up, I don't have a huge opinion. I know where the break points are in the market. I know where I need to start being more bearish the dollar or bullish the dollar, so I'll go over that. But I'm not convinced either way. Now, let me tell you the reason why. Last week we had strong inflation data, right? The CPI data was just really, really strong. Now again, it's transitory. You can say, well, it was due to the supply chain, everything else. Hold on, and then producer prices. Sorry, just looking up really quick. Producer prices were stronger as well, and that might feed over to the consumer. But as the Fed's told us, it is all transitory. Although and I have to say the market took it all in stride. But then the weekly retail, the retail sales at the end of the week, were really weak. And if you think about the consumer being weak, employment's kind of, and then because of the jobs data a week and a half ago, right? And then also you have inflation data that's strong, but it's transitory because of supply chain issues and blah, 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 whatever else. And it really is not here to stay. Then for all intents and purposes, the market should recover. Stocks should be okay. They should believe that the Fed is going to be active. We're not talking about tapering just yet. We haven't even talked about talking about tapering. We haven't even thought about talking about tapering. So the Fed should stay dovish, right? Okay, so I hear that argument. But I still look at the S&P and say, well, we did have a down week, right? If you look at the weekly candle, yeah, it's a big pin bar, but, it's kind of an ugly reversal at one point, On Wednesday, it was looking kind of ugly. But notice, and I'm going to stop here on the S&P, notice how we came out of an ascending wedge. We've bounced back to the underside of this trend line. So I think early this week, we're going to know, I believe like Monday, Tuesday, we're going to know if we're going to surge to new highs or we're going to head back to the 50-day moving average. That's my opinion. I think that, and remember I told you, I don't have a big opinion, especially on the dollar, but in equities, my opinion is basically this. Resistance is here and support's here. Let the market tell me what it wants to do. I'm still a little nervous about the market just grinding back up into new highs, especially while we're above 4,000. And I'm talking just about the S&P here. But a break back below the 50-day moving average would indeed, in my opinion, put this support back into view, and then we'd be at risk of getting a real sell in May, go away type of move. Okay, so again, I'm going to reiterate. I'm going to let the market do the talking for me rather than me making an assumption on which way I think the market's going to go, because I do think we're up against a pretty decent support, decent resistance. 50-day moving average being support. The underside of this trend line, maybe the 78% retracement being some resistance on the S&P. Now that's the S&P. Let's talk about the dollar. Let's talk about the euro. I'm not fully sold on the fact that the euro is going to trade back up towards 123, 124. Because let's not forget that we did have a false breakout last week, right? So if you're looking at the euro, that was a little bit of a false breakout. But you also notice that we have this trend line that is an ascending trend line that held. So again, I'm going to reiterate, I don't have a big opinion this week, but I do know where we get bullish and where we get bearish. So the euro, in this case, above 122, I do think it's bullish. I do think we're going to trade back up here. We trade back below 120.50. Yeah, I think we're going to see the 200-day moving average again. So again, I will reiterate, I'm going to let the market do the work for me. I'm going to let the market show me which way to go, because most weeks, you guys listen to me, some of you have listened to me for years and years and years. I have an opinion, and if I have an opinion, I'm going to voice it. and I'm going to tell you how I want to approach that opinion or that point of view. This week, I don't really feel that. I do feel like I need to be observant and just let the market tell me where we want to go. Now, there's a few things that I am watching, all right? And I pointed out the euro. Let me also look at the Aussie because we do have, the meeting minutes. We have employment data in Australia, and then at the end of the week we have, or on Thursday, we have retail sales. Excuse me. Thank you. It's actually Friday morning, but Thursday for us in North America. That's what I was thinking. If you've been listening every day on our free F.A.C.E webinar, by the way, let me stop here. If you don't know, we broadcast every morning throughout the trading week. There's a link down in the description down below. Click on it. It's a Zoom link. You can listen in. It's free. And you can hear my take and my colleagues, and then get some great interviews too with some leading industry experts that you'll read about on here on Trader Summit. But make sure you register that webinar so you can kind of get my updated view. As I pointed out this last week, we did have this false breakout in the Aussie above these highs, but at the same time we also held support down here. So 77 cents is support. And by the way, if we break 77 cents, we should come right back down to this big neckline. This head and shoulder pattern is still a risk for the market. It's still a risk for the Aussie because even though it's not symmetrical anymore, it still caught people long, and that's why we had that false breakout up top. So I think between 78.20 being resistance, it's actually right here. Let me do that. 78.20 being resistance and 77 cents being support. Again, let the market do the work here for us rather than you and I assume which way it's going to go. Let's let the market do some work. Because again, I don't have a really good feeling, and maybe you do, but I'm not so much. But there are, like I said, a couple of things that we should be looking at, and I think we need to be aware of. Let me see how I'm doing on time. Doing good. Okay, so here's one of them. Gold. Look at the 200-day moving average in gold. We're back up at these highs. We completed that double bottom. We're back up at these highs, and the 200-day moving average is right here. And there's the 618 retracement at 1855. If we breach this 1855 level, my opinion is we would be going higher. Now, why is that important? Because if gold is going higher, inflation, fears, risk on, whatever you want to blame it on, if gold is breaking higher, that means the dollar is probably moving lower. That means the euro is probably moving higher, Aussie is moving higher. You get the point. The other thing I want you to look at, and the other one thing I want you to keep in mind is that if you look at Bitcoin, it is trading heavy. Now, I know it's Saturday, right now it's Saturday, excuse me, it's over the weekend. We could very easily bounce from these levels, but if you've been listening to me this last week, you know that the line in the sand, major support for Bitcoin is about 43,000. We break below that, and I'm fearful that cryptocurrencies will come under pressure. Cryptocurrencies led by Bitcoin coming under some selling pressure would cause some institutional selling. You should feel the ripple, no pun intended. You would feel the ripple in other asset classes, in my opinion. That's why if Bitcoin breaks lower, then that means the dollar may strengthen on risk aversion. That would be euro lower, Aussie lower. Again, you get the point. So guys and gals, look, it's Saturday. It's midday Saturday. I'm filming this video for you. Our editors are going to be working on this tonight so we can get it to you tomorrow. If you like what we do and you enjoy these free videos, please give us a thumbs up. I appreciate it. Our team appreciates it. And comment down below. If I missed something, please, or you're like, Blake, I disagree, or you have an opinion, please, let's hear it, because I'll respond to you down there. Thank you guys, and I hope you all have a great remainder of your weekend, and I'll see you on the F.A.C.E webinar on Monday morning. Have a great day.